Kiwisaver's got to a size now where it's been bubbling away and it's kind of it doesn't really matter. But I think once it hit that $100 billion mark and now around that 130, it's, this is a pot of cash. This is a big thing.
From the 1st of April 2026, the compulsory contribution is going to increase from 3% to 3.5%.
Kiwisaver's there to protect you from yourself so that you can't touch it, and you've got the compounding where you basically can't interrupt it.
We don't trust the government to support us because they're only ever looking to be re-elected, not to help you out.
Well, it's only taken us until 2025 before the country's finally started to get serious about saving for retirement, and there are increasingly more and more chats from Kiwisaver commentators about how it needs to increase, and the government are doing something about it, Phil.
They sure are. There is a proposed change, and we've had to refresh ourselves as to what those proposed changes are because we are the consummate professionals. But from the 1st of April 2026, so that's less than 6 months away, the compulsory contribution is going to increase from 3% to 3.5%, and if the current government remains in government and aren't booted out at the next election, their intention is to double it so that it becomes a 6% employee and a 6% employer contribution by 2032, I believe.
So what what's that, another 6 odd years until that would be in play?
Yeah.
And that would be 6% from the employee and matched by the employer, 6%.
Yeah.
And yeah, I believe that you can opt out, and that will be the interesting thing to watch play out.
I did see that, and that's exactly where my mind went of how many employees decide to go, because it's opt out by the employee, not the employer. The employer's got to follow what the employee does, presumably. So if you don't want to contribute 6 and you only want to do 3, then your employer will only contribute 3, presumably, not 6. How many people go, I actually want that 3% in my bank account, because they're not prepared to take the sacrifice today for retirement by the time that 2032 comes along. I would like to hope that our retirement age has increased from 65 to maybe 70 might be a push.
Oh, wow. You wouldn't be getting it now.
God, no. But I would hope that by 2032, that we've addressed the largest costs to the New Zealand government. That is what we always go on about, the welfare checks to the boomers, the superannuitants on their gold cards, that it should probably go to 67 age at least.
Well, so from the 1st of April, we see that the default employer and employee contribution rate, so as Phil says, contribution rate will rise to 3.5% from 3% for you and your employer, but there is temporary rate reduction. You can apply for a temporary rate reduction from the 1st of February 2026 if you want to carry on contributing at 3%. It's like we try and encourage people to do what's going to be good for them in their future. Then we're like, but actually, you don't really have to. Here's the complete out straight away. This could be because you can't afford that rate increase or want to save in other ways. You'll be able to apply for a temporary rate reduction for a 3-month, 92 days to 12-month period. You can apply for the rate reduction as many times as you like. Your employer can choose to match your temporary rate reduction. Once you move from your temporary rate to a higher rate, will notify your employer. More information about how you can apply for a temporary rate reduction will be available in early 2026. Now, mate, I dived into the Kiwisaver report, and there are now, this is from 31st of March 2025, there are now 3,385,856 Kiwisaver members in the country. But I will give you some data that will probably blow your mind. So there are now 1,375,820 members, so not Kiwi people, members of that 3.3 million not contributing, up by 6% in a net increase of 77,500 members. As a percentage of Kiwisaver population, not contributing members currently account for 40.6% of all members.
That's a horrible number.
Yeah. So we build a system and we try and teach people, okay, we want you saving for your retirement, and then 4 in 10 people are like, I'm not going to contribute.
My other 2 cents worth on proposed policy changes to Kiwisaver and dealing with the increase in cost to superannuation would be, you referenced earlier that you can apply for a temporary reduction in the compulsory rate thing. I'd love to know how long the temporary reduction could go for, but to counter that, I reckon bin it and we make it compulsory.
Kiwisaver compulsory in general.
100% compulsory for absolutely everyone. I think you should opt out if you can prove that in the future you will not rely on the government. And I think there is a small group of people, and they're probably on the NBR rich list, that could probably hand on heart say, I don't need New Zealand superannuation because I've got a level of wealth and income that, hey, I've paid my fair amount of taxes. I don't need to be contributing to Kiwisaver and be it forced on me because I've got all of these other assets over here. I'm not going to need anything else. I mean, I don't want to get into the argument of like they shouldn't be or should be entitled to New Zealand superannuation, because apparently the boomers will tell you it's an allowance rather than a benefit.
Entitlement.
Entitlement, yeah. Park that argument, but I think there's a certain very, very small group of people that could potentially say, hey, look, I don't need to have Kiwisaver, but for the masses, like including myself, I'm up for it. Like, I can't wait to get to 6%. Let's do it. Like, let's do it now.
Yeah. Well, we'll come to some of the kickback on that. But I think some of these people who don't contribute will be, because they'll tell us in the comments, people who are self-employed, for instance, and they go, well, I'm just saving into this. I could just save outside of it where I can access it if I need to. Well, I get that argument because that makes a lot of sense. But really, Kiwisaver is there to protect you from yourself so that you can't touch it, and you've got the compounding where you basically can't interrupt it. So I think a lot of the sole traders go, well, I'm not going to do it. But in this context, from the report, it says it is worth noting that more than 370,000 members, approximately 11%, are either age 65 and over, so maybe they've stopped contributing, or 17 and under age groups that are more likely to not include non-contributing members. Of the total non-contributing members, 111,369, or 8.1%, are on a Section 104 savings suspension, an increase of nearly 20,000 members from last year. A Section 104 savings suspension is available for members who have contributed and have been a member for 12 months or more. You have to have a savings, or you can have a savings suspension for 3 months to 1 year. Anyway, I think the problem with all of it is that there's the underlying narrative, I guess, is that, well, how can people afford to do this? So then we say, oh yeah, okay, we'll let you opt out. But who's then going to pay for those people if we keep teaching them that that's the right way to think? Now, I guess it's, this is where you then get called privilege for saying people can't afford to do it. But, you look at regos and warrants at the moment, and I believe that nearly 50% of them are expired or not new. Yep. So people are choosing, well, I can't afford to pay that, and there's no real consequence, so I just won't do it. So a law-abiding citizen is then, you kind of get shafted because you are staying current and doing the right thing, and you're avoiding the fine. But how are 1 in 2 people avoiding the fines? Like, the fine for me would be enough to go, I'm going to need to do it, but obviously that's not happening. You could almost argue, why don't they just renew those and direct debit your account? You don't get a choice to renew it.
Well, I guess the fines are a bit like gambling, because you think, well, the house will ultimately win, but when? And much like speeding, you will do it so often, and then will come a time that you'll get a ticket, because you're not going to get the ticket every time you speed. So it's just, what's the chances of being caught? And they game the system, I suppose.
And I think that's what people are doing with their retirement.
Yes.
Is I'm going to gamble that she'll be right, mate. It's okay. It's already too expensive to save. How am I going to think about my future when I'm stuck in survival mode at the moment? Completely get that. Or even I'm not into it. I'm going to invest outside of that. Well, who's then going to pay that bill for those people? And I think Kiwisaver's got to a size now where it's been bubbling away, and it's kind of it doesn't really matter. But I think once it hit that $100 billion mark, and now around that 130, it's, this is a pot of cash. This is a big thing. There's 3-point-something million. There's 1 million people not contributing. There are big numbers. It's really in that maturity of what's Kiwisaver going to look like into the future. Big goals start with planning, and that's why we run 90-day business planning sessions one-on-one with aspirational business owners. Together, we help you set clear targets and start taking action straight away, and action on the things that matter, like pricing, margin, cash flow, ideal customers, and making sure that you're moving the needle to get closer to where you want to be. We've got tons of strong Google reviews in this space, so go and check those out. This could be perfect for you if you're after no fluff business planning and are keen on accountability. If you want to apply to book your 90-day plan, go to nextadvisory.nz and let's see if this is a good fit for you.
I think if you're not a member of, if you're not actively contributing to Kiwisaver, you're missing out on the thrill. And I think, for me, once you get over the hump of sacrificing the money that is left, then you get used to it because you adjust, you adapt. Then periodically you go in and you check your balance. And I think it's quite exciting watching the balance grow and knowing that you can't touch it until you reach the age of 65 or whatever it's going to be in the future. And then they've got those little calculators that will go forecast my balance, and it's got a high, mid, and a low case. And you're just like, wow, if I keep contributing this, or if I change and play around with it, this is how much I could have in, like, that's actually quite cool to be able to sit there and go, gee, I'm going to have this money. Life is actually going to be okay by the time I get to retirement. And the people that aren't doing that and educating them, and that's the piece I want to come back to, are ultimately going to miss out because they're solely going to rely on whatever New Zealand's superannuation looks like by the government. And if there's one thing that we've learned, we don't trust the government to support us because they're only ever looking to be re-elected, not to help you out.
Yeah, there's so many different things that pop up with Kiwisaver. Someone messaged me the other day, well, what if I die before I'm 65? The government get my money. I'm like,
No, they don't.
No. So there's all these, people build all these reasons of why they shouldn't. But I guess one of the main things we should point out for people who are in business on drawings, perhaps, one of the advantages of being on wages is then, making sure that you're doing Kiwisaver and then having the employment match as well. You are your employer. Okay, it's tax deductible. You're paying tax on it in some way, shape or form, and it's ending up in your Kiwisaver. But you're going to be speeding up your saving for your retirement.
Yeah, I'm going to go out on a limb here, and business owners already have enough to deal with on their plate. But I'm going to advocate for business owners to carry some degree of responsibility, although they're probably saying they've already got enough, that they need to take on some degree of ownership around educating their employees. And it's educating around you should be taking on board the increases and what are the things you can be doing to help manage it. This is what your life can look like. The other stat around Kiwisaver, the amount of people that are in default providers rather than actively taking an interest in their Kiwisaver and picking one, a provider that is reputable, and then two, a fund that matches their risk profile and age and stage of life. And I think business owners, particularly in the SME space, it's 90% of our businesses are in that SME space with 20 or less employees. I think they need to start and get together and go, hey, look, here's some changes to Kiwisaver. You've got to educate yourselves. Here's some material. And I think what you're doing with Keep the Change is a great starting point in terms of a massive backlog of content of podcasts and videos and YouTube bits and pieces that people, either employees or business owners, but particularly from the business owners, go, hey, look, employees, I'm putting this together for you because I care about your future self. Here's some things that you can go away and learn about. Or let's actually, over our lunch hour, sit down all together. I'll put on a feed and let's watch one of the videos in double speed and then have a Q&A session afterwards and go, right, out of all you mongrels here, sorry, I shouldn't use mongrel, out of all you great people here, who is actually actively contributing? And people are going to raise their hands, other people are going to be too shy. Well, it's just like, well, let's break this down and understand why and go, okay, let's start and crunch some numbers and look at what a 3% reduction is going to look like. But by making a 3% reduction today, what's that impact going to be to your future self come retirement? And then mapping it out and going, okay, it's 3% today, it's 3.5% next year, building up to 6% in 2032. Because at the same time, whilst employees need to go on an education journey, the employer, on the other hand, is probably looking at, oh, there's more cost here, we're already burdened with enough. Yes, we know that. But this is, I think, not too dissimilar to minimum wage going up almost every year. Now, under the previous government, it had some significant increases 1st of April every year. And I recall getting massively frustrated most years because they didn't announce it, what the increase was going to be until very close to the 1st of April.
February, maybe?
Yep.
Yeah.
And it's just like, come on, guys, government, your decision makers, you're impacting the profitability and decisions that businesses need to be making. We need to know the answers in November, December so we can start and plan, because there's some businesses that we deal with that are forecasting into the future and we've got a material cost to their wage bill. The same thing is going to happen to Kiwisaver, and the contributions going from 3 to 6%, yes, by 2032. But if you've got a significant amount of people, I'd imagine if you've got 20 people on your payroll, that's a lot of people. And if it's increasing by 0.5% every year based on your payroll, you're going to want to map that out as to what it's going to look like, because it's going to have to impact some other decisions that you're going to make around sales, pricing, that type of stuff, because we still want to make a profit.
Yeah, and you can sure as shit believe that the people who are really dialed in with their personal finances, they are going to want 6 and 6.
Yeah.
I asked the Keep the Change audience via Instagram, ran a poll, and over 90% of people were like, yeah, I'll be doing it.
Mean.
Yeah.
That's encouraging.
Now, of course, that audience is already thinking about
Highly
financing.
engaged.
Yeah. Whereas, you've got 1 in 3 people that are actually probably, not contributing at all. But the people who understand it, they are going to be, wow, this is a free shot at another 6%. The argument will come, oh, you won't get wage payments, increases as fast, because then they'll just dial those back, because they'll say, well, we've got to pay 6% of your Kiwisaver now. Oh, your pay is including that. I think real good and honest business owners in the country will have to learn how to adapt and to improve their business and their business's profitability to account for this. One of the things that you sign up for when you get into business is that the rules are always changing.
Exactly.
And you have to adapt, much like the NRL teams, the Sevens teams, the rugby teams,
Yeah.
And we don't have to get to go upstairs to the bunker, but we have to figure it out in our businesses, how we're going to do it. We can't just go to the insurance company, oh, mate, I saw you put up my bloody insurance 100% over the last 2 years. Nah, get bent, I'm not going to pay it.
It's always fascinating when something comes out that is perceived to fundamentally change like the rules of the game, the excuses that come out. And the classic one recently is, capital gains tax and the impact on property prices. And you only have to look overseas and go, what happens to property prices over the long term? They only go one way, baby.
Yeah.
Whether there's a capital gains tax or not, they're going up. With Kiwisaver coming in, it never used to be a thing. Then all of a sudden we got hit with this 3% contribution, and employers are going, oh, geez, I now have to pay an extra 3%. And then, on the top end of town where you're earning the big money, $180,000 or more because you're in that top tax bracket, the employers were starting to get fancy and going, oh, well, it's total gross remuneration, the 180 or the 200 or 220 includes the 3% because we don't want to have to pay you a cent more than what we've actually budgeted. Like, that aside, the economy and business and all that will adapt. And I think at a 0.5% increase every year, or however often it's planned out to 2032, is manageable. It's not like we're going from 3 to 4% or 3 to 5% in 1 year. I mean, if we go back and look at the minimum wage rate changes in prior years, I think there were some increases that were getting up to, I would say, 7 or 8% in 1 year. Well, that's massively above the rate of inflation. That is material. I mean, if we were back, or you were back at Audit New Zealand, that green pen would get an absolute hammering.
Circle this.
At 7 and 8%. Yeah. You'd be going and talking to someone and go, what's the story here, sunshine? Because this is breaching some thresholds of materiality. Whereas the 0.5%, the 0.5% change annually, the green pen gets to stay away.
Yeah, I think businesses will adapt. I get it. I had messages saying, oh, this will be the final nail in the coffin and there's just more cost for business owners. People do business for different reasons, but we've survived pandemic, we've survived wage increases, inflation, costs going up, rents going up, insurance. Okay, not everybody has, right? But to think that it's just going to be smooth sailing from here and there aren't going to be changes to how the business environment works is just naive. And so we've got to be thinking about it ahead of time. Okay, what are we going to be doing about that? How can we improve profitability in our business? How can we introduce technology? Maybe you then don't need an extra staff member because you're that worried about the costs. Okay, well then are we going to look at offshoring? Are we going to look at machinery or technology that's going to improve it? That's what we're forced to do in business.
I think with people that are, and I don't know whether they're the type of people that listen to this stuff, but if they're sending those kind of messages, they would strike me as the type of people that, one, aren't in complete control of their business, and then two, I believe it would highlight that they're operating from a scarcity mindset rather than abundance, which we talk about so frequently, because if you were in control, complete control of your business, and you were on the abundant side of the fence, a 0.5% increase, if you modelled it out in terms of the cash cost impact to your business from April onwards, and the cash cost is actually only going to kick in from May when the PAYE is due, unless you're using a gross system like Smartly or iPayroll, which takes out the debit. But in any case, from the 2027 financial year, you model it out, you'll look at it, wrap some numbers around it and go, okay, that's not that bad. This is what I need to do if it is actually a material amount. Let's carry on.
Yeah, and I think the thing that I saw when all this came out, or what I'm picking up, and I guess this is the point of this pod too, is business owners need to understand this is a trend. Labour and National, the New Zealand First, like they're all on the same page. They're all saying, oh, it needs to be more. And some are even saying it needs to be compulsory. What we're going to see is these parties having agreement that people need to be saving more for their retirement. So what are they telling us? Well, I think if you go back and have a look at what National did as well, they said, well, from the 1st of July, the government contribution has dropped from 50 cents to 25 cents. And if you're earning over 180,000, you're getting nothing. Yep. So like I zoom out and go, they're basically saying we can't afford to keep kicking in. So our finances are under pressure. Like they know that deep down.
Yep.
And then we're not going to, come to the party with anything where we're encouraging this. We're basically saying your employer needs to pay, which they'll end up, the consumer will end up paying via increase in prices, no doubt, to then protect the margins potentially. And then you, the employee, need to save as well. So the government are almost going, we're backing out of this.
Yes.
This is like
putting it onto the responsibility of the person to go, you need to be better prepared for your future self.
Yep.
And to do that, you need to be taking more of a sacrifice today.
And then the blessing and the curse is because Aussie's so close and because their system's been going for so long, instantly then you get the default, oh, well, in Australia, the employer pays the 12%. So then it's like, oh, well, I shouldn't have to do anything. Far out. Like, take some responsibility. We're not Australia. We don't have their economy. We don't have their scale. We don't have their resources. We're not selling all this shit to China like they may be. Yeah. We haven't been doing it since they have. So it baffles me how many people will say shit like that. And then if you go, well, hang on, who's your Kiwisaver with? Oh, with the bank. Well, where's the bank from?
Yeah, Australia.
You goose. $1 and $2 in Kiwisaver, and that $130 billion is managed by a bank, and they're charging a fee. Where are the fees going? Over to Aussie. Oh, it's way better in Australia. Maybe start by taking some action and actually supporting a local Kiwisaver provider and going, oh, actually, I might take a bit more interest, and maybe the bank don't need to manage this. Because, I am going to get pissed off when I read the next article about how many billions the banks are making.
Yeah. Oh, there's always something out there for people to have a crack at, and I think when it's going to hit their personal finances and it's in the back pocket, probably because it's going to affect their mortgage payments and it won't let them get their next rental property.
Or maybe.
That can only be a good thing.
Yeah.
Compulsory it should be. If you're listening to this, folks, the challenge for you come 1 April 2026 is don't be one of those people that take the temporary reduction or permanent reduction or whatever it is, jump on the bandwagon and ride it to 6%.
Yeah, my final piece would be, if you've got kids, then think about your kids, maybe not even Kiwisaver, but think about what Kiwisaver is designed to do. It's designed to teach you compounding over a long period of time and protect you from yourself. Perhaps from an early year for your child, you could set up a pool of cash and never touch it. And by the time they are 21, that could be or 18, it could be moved into Kiwisaver, for instance, or maybe it doesn't. Maybe it sits outside of it. But, we've introduced Kiwisaver in New Zealand not actually that long ago, but to start to fix some of the problem that we have, and that is an aging demographic and people not being prepared for retirement. You can go a step further by modelling that and going, okay, I can put money into a managed fund from day one for my child, and they're not going to have to worry about this shit. Of course, then you're going to have to teach them about managing that money and the risks that come with that. But, this is a clear signal from all of the government parties that we're not doing enough to be prepared. So we've got to prepare for ourselves and then think about how we can prepare for our kids as well.
I think that's smart. And the example that I would share on that is Miss 18 on the home front got a kick up from the arse from you-know-who, and it was just like, well, you're now 18, and this is going back a few months now, you must enroll in Kiwisaver. And it's like, no, if buts or maybes. Fast forward a few months, and it's just like, well, you need to go out and find your provider and the plan to go in. Anyway, money's been going in and starting to see it build up.
Nice.
And there's this degree of excitement of just going, oh, wow, well, that's kind of happened quite quickly. Oh, cool. And then it's going, right. And so it's just for the younger generation. And this is why I'm encouraged the other changes to the rules is it's opening it up to 16 and 17-year-olds. Previously, at the moment, it's not available to them, I believe. only from 18 onwards. But I think it's that whole gamification thing of making it exciting in the short term, that it's not something you're going to get for the longer term, and just seeing that and they're going, oh yeah, this is mine, this is cool. This is like, yeah, now you can see it. It's like, yes, Dad wins again.
Yeah, and it's a really good point, because that's what I think a lot of Australians they get that feeling because there's so much in there. And again, but the employer pays it all. Just move that for a bit. There's been no conversation about, shit, imagine what people are going to experience when they're contributing 6 and 6 and they're starting to see their snowball really roll, and the decisions that they might make differently, the abundance they may live into, the risk that they may take outside of, saving for retirement, because they know, oh shit, well, if that just keeps compounding till I'm 65, I'm pretty sweet. I can actually take a bit of risk over here. You know what? I'm really miserable in my job. I don't like it. I am going to take a bit of time off and retrain and get into this, but I don't need to worry about my retirement because that thing's just going to keep compounding. And I think there hasn't been enough chat about, shit, this could be, going from 6%, 3 and 3 to 12. It's effectively a 100% increase. And some snowballs are seriously going to roll for people, and that will create different behaviour for those people in the future.
Sure is. My final 2 cents pieces would be, as employers, plan for this, particularly if you've got a huge headcount. Work out what the cost increase is going to be to your PAYE going out on the 20th of each month. And then secondly, as a business owner, start to provide some resources to your employees and say, hey, look, Kiwisaver is a serious thing. At 6%, at 12% combined, it's starting to get some big money. Let's provide some education and resources to help people make better decisions so they actually ultimately end up in a better place by the time they get to 65.